Today is 20th, okay, 20th 5 2024. What we have done, we are doing, see, this now you can understand. When you're saying a substantive procedures, we are going to see this is the way audit will work, okay. When you are talking about the substantive procedures, we want to know what are the different types of evidences, multiple evidences, as simple as that. When you are substantive procedures with respect to payables, accruals and expenses. See what happens, the thing is you assume you are having salaries, okay, you will have salaries, you will have rent, is it, you will have to pay expenses which are monthly expenses, okay, my expenses which you are going to pay monthly, rent will be there, salaries will be there. Now what happens, you are for the month of, assume this is for the month of May, you will pay the salary of month of May in the month of June, okay, you pay on 2nd of June. But when you are paying on 2nd of June, salaries of May you are paying in the 2nd, but you have to account it in the month of May. Salaries is the expenses. What will happen? Salaries will be debit, is it? Credit will be what? Credit will be payables. Credit will be, you are not paying, you will pay in future, is it? May salaries. Now when you are paying in the month of June, May salaries, is it? What you will do? You will credit payables. You will cancel the payables, okay? And sorry, debit will be payables. Credit will be what? Credit will be cash or bank. Okay, cash or bank. What happens in turn? We are cancelling payables and we are cancelling payables. And the end result will be debit will be salaries and credit will be bank. This is the simplest way of understanding. Nothing is there. That's what. Now when you are doing the audit, you will see whether it has been classified in the right month, in the correct month, is it right? It has been, what is the amount, is it? Is the amount is right, classification is right, the debits and credits are right. We will see all the things accordingly. What we are doing whenever you are talking about the payables, the same concept. Listing, you have to list the payables to whom you are paying, is that you have to list the payables in terms of rent, payable in terms of salaries, is that payable in terms of traveling expenses, whatever the amount is there, is that payables in terms of administration cost, anything is there. You have to classify the payables. And most important thing, if any large debits are there, is that any large debits are there, like this, is that like this, any which should be reclassified as receivables or deposits. Is that when you are talking about the payables, you have any large debits. So sometimes what will happen, you will have debit balances. Is that payables will always, it is a liability. Is it? It is a liability. It is always be a credit balance. Sometimes what will happen? See, payables in terms of usually taxation. Is that taxation is a current liability. Current liability, it will be what? It will be you will have the credit balance. Sometimes taxation will have debit balance also. You have not paid. Is that it in the trial balance very clearly? In the trial balance, you will have taxation debit balance. Means it's outstanding. You have not paid. Is that? Then it means you have to sometimes over provision, sometimes under provision will be there. Is it right? Sometimes over provision, sometimes under provision will be. Then what we have to do? Any huge amounts are there, because this is the one area where there is a misappropriation, where there will be some misclassification, where there is a chance of error or fraud will be there. That is the reason we have to, if any payables are there, large amount, large debits, we have to reclassify. If it is there, then you have to reclassify. Means you have paid more. Is that where you have paid to some customer more amount than possible? If that is the case, it has to be reclassified as receivables. Sometimes what will happen, payables will be current liabilities, okay? Payables will be always be current liabilities. You should know, or long-term liabilities. Maybe sometimes you will, classification will be wrong. Okay, classification will be wrong. We will instead of we crediting payables, we will credit some loans. It will happen. Okay, if that is the case, you have to mention which should be disclosed separately. Nowadays, if you take the most important topic which is there nowadays is now the what they say, whenever you are talking in terms of liability should be clearly classified as a current liability and non-current liability. What is the current liability? Current liability is nothing but what you are going to pay in the next 12 months. Is it next 12 months after the reporting date? Means after 31st December, what is the next 12 months you are paying? That is the current liability for the firm. This will change as and when it's possible. Read the disclosures. Is that always keep it in mind. Notes to the accounts. Any doubt, whenever you find any doubt anywhere, just refer notes to the account. This is the topmost secret of the auditor. Is it right? You will see, refer the notes to account. Once we are seeing notes to the account relevant to liabilities, what will happen? We will have a review, and we will have some basic understandability. We'll get some understanding whether they have classified as a current liability or they have classified as a non-current liability. We will also understand what is the basis of classification. You see, as an auditor, what will happen? You are doing the audit. You should not come to a conclusion immediately. Okay, we should not come to a conclusion immediately that something has been done wrong. When there is something we suspect, you say one evidence, two evidence, three evidences. You have to see multiple evidences. Maybe your judgment will be wrong, your assessment will be wrong. Ultimately, you have to discuss with the management that yes, any clarification. Then the management will give the reasons why they have done like this. Okay. Then only that lastly you have to come to a conclusion. Now, what happens whenever talking in terms of payables? Is that from payables, from where we get the payable? Payables will get from credit purchases. Credit purchases gives to payables. Payables will pay. You are going to have a cash payment. Is it? What we are doing in terms of purchases? Purchases are very important. Every other day, every other time, there will be purchases. What we are doing in order to make sure that we are paying to the right people, is that we are paying to the right people. Payables are classified. What is the source? Source is your inspect of invoices. What is the source of credit purchases? The source of credit purchase is the purchase invoices. That you have to make sure that they agree to the account posted to the general ledger. Which account we are going to post it? We are going to post in the payables account. I can put it more clearly. We are going to paste it in a payables control account. Everyone will be have a unique account. Is it right? Payables controller. Compare expenses, making of administration expenses. I told you, what are the administration expenses? You will have salaries, you will have rent, okay, to the prior year charge. Always keep, now you understand, prior year. See what happens, you are talking about 2022 and 2023. Yes, 2023 we have paid 1050. 2023 what will happen? Maybe you will pay marginally more. Okay, marginally more, then fine, you can have an understanding. But 2022 you have paid 1050. Now 2023, assume you are paying 1950. What will happen? You will ask, what is the reason of increase? This is what we are talking about every time, prior year. Why we are talking about prior year? We will say any extraordinary changes. Is it an extraordinary? Prior year charge, an expectation to line by line basis. Line by line basis means you have to calculate salaries to salaries. You are talking about rent to rent. You are talking in terms of purchases to purchases. Last year how much you have purchased? this year how much you are purchasing. Definitely. He said last year you have purchased 1050, this year you will purchase 1250. It is little bit understandable. But last year you are purchasing 1050, now you are purchasing this year 1950, then definitely there will be a question mark. Why there are more purchases? So what are the reasons of more purchases? So inquire with the management. Always keep it in mind. Communicate with the management whether there are any unsettled claims. Is that whether we have not paid or any obligations before the end of the year. Means if there is any unsettled claims, any outstanding purchase, you are purchasing and you are not paying. If there is any outstanding, you have to inquire with the management why you have not paid to this. Is that usually how many days? There will be 90 days maximum. If there is any more than 90 days, then there should be some reason. There may be many reasons. Is that you are purchasing the goods and the purchases will not as per the quality. Is that there will be some disputes will be there. Is it that you are not agreeing with the quantity, you are not agreeing with the quality, you will not agree with the specification, then definitely the people will hold the payment. Recalculate accruals is a mathematical accuracy. Prepayments to gain evidence of other expenses are not over or understated. Yeah, every time, see the thing. The auditor will do that. Will use the calculator. Is it right? You will calculate into number of days. You will take into consideration the purchases. Is it right? Your purchases. You will take the quantity. You will take the price. You will recalculate so that you want to make sure that it is calculate. It has shown accurately. Compare what is the purchases. See, the purchases comes from where when you are talking about the sales. Is that sales minus cost of sales? It gives you gross profit. Is that what is the cost of sales? The cost of sales is opening inventory, purchases minus closing inventory. The major chunk, the major area is what? Purchases. Now, when you are doing the things, you will see, you will calculate gross profit. Is that you will have the budget, that you will make a budget that this much will be the gross profit. Usually what will happen, 20% is the gross profit. Okay, 20% normal. Now it means that if you are taking 20%, 80% will be the cost of sales. Just imagine, out of the sales of 100, 80% will be the cost of sales and gross profit is 20%. And in this 80%, the most important thing is your purchases. Gross profit with the previous year. The gross margin per budget and expectation. Any answer. Last year it is 20%. Now assume it is going to be 2% or it will be 45%. Then immediately what are the reasons why there was less, why there was more? Is it? This is one of the indications. Is it? It is one of the factors which you have to look into. Is it? Are you clear about this? Is it okay?
Yes, sir. It is
Okay.
clear.
Now, this is what we are talking about, purchases. The second one is wages. Wages is also payables. Okay. Reconcile the gross cost of payroll. Most of the time what will happen? It happens at the factory premises. Is that way? You see the thing. What happens in the factory premises? They will have a salary. Is that? They will have on weekly basis. Is that right? Weekly basis. And they will have sometimes overtime. Is that? They will have sometimes overtime. This is the one which they will ask in most of the examinations. Is that? When you are talking about the overtime. Now what happens? What is the wages you are paying? Because what happens when you are talking about the wages? Is it that when you are talking about the wages, we will hire people based on the demand. Okay, demand for work. If the work demand is more, we will hire more labor. If the work demand is less, we will hire less. It will fluctuate. Then you have to be a little bit careful. Okay, what is it? We reconcile the gross cost on the payroll to the wages cost. What we have shown in the payroll, what we have shown in the statement, and what is the wages cost. Is that the reconciliation means the both should be same. You will re-perform cast totaling of payroll records. Here you will you will say that how many laborers are there, 1, 2, 3, 4, 5. Is that how many days they are working? What is the wage rate? Is it what is the wage rate? Is it to why we are doing when we are doing it? We are doing to confirm the completeness. Is that completeness and accuracy? Okay, totaling is correct, calculations are correct. That you have to make sure. Is that so that we are going to be that will be the basis for generals. That will be the basis for debit and credits. Confirm payment of net payroll records to check and bank. Okay, fine. We are taking the thing. Take the statement. Okay, take the statement. Take the statement and check the bank statement. Is that whatever the statement is there, whatever the statement value and what are the bank statement, both has to be same. Inspect payroll for unusual items. Is that any items which are plus or minus? Is it there? Both positive and negative. See the reasons why they are plus or minus. What are the reasons? Is it perform proof in total analytical procedures. What we are doing, and see, whenever we are comparing with the previous year, it is an analytical procedure on payroll. Is it? You want to know what is the average wage. Is it? What is the average wage? You will say what is the last year figures and what is the expected increase. You will say that yes, this is what happened. 2022, we are making a budget. We will make a budget of 1,500. 2023, you based on the previous year budget, you will do the next year budget. You will say that the next year budget will be 50% increase. Is that 50% increase? Means 2,250. 10% increase. Is that? If we are going to say it is 10% increase, it will be 1650. Likewise, we are not putting the values. Just I am saying how it is going to be worked out. Re-perform calculation of statutory deductions. When we say statutory deduction, see the thing. When you are talking in terms of wages, is that sometimes they will deduct insurance, sometimes they will deduct medical. Is that sometimes they will, here we don't have, but in other countries they will, what will do, they will deduct direct tax. Is that taxation is nothing but taxation insurance. Is that statutory by law. Okay, you have to pay. Is that you have to pay. What do you perform calculation whether we have paid statutory deductions and whether valid it is the deductions are right or wrong. Is that the correct or not and it has been included in the payroll expenses. We will see how much is the gross salary. Is that you will also come across. Is that you will have the gross salary, then you will have some deductions. Is that you will have some deduction. Insurance deduction is there. Pension, is that you will have the pension will be there. You will have the insurance will be there. We don't have, but in some countries you will have the tax. Is that we have to make sure that whether all the deductions has been done accordingly. That this is with respect to wages. Now, again, when you are talking about the purchases, is that it is the when you are talking about the purchases, it takes about supplier's confirmation. See the thing, how it will work. You will have the credit purchases. Is it? You will have the credit purchases and you will have the payables. Is it? You will have the payables. These payables will have the closing balance. See, we have to compare. Is it right? We have to compare our book balance and we have to compare what is the balance in the client's book. If you have the balance of 12,460, the client's book also should show 12,460. There should not be difference, is it? What you will do, you will send, auditor will send a letter to the client with the permission of the the auditor will send the letter to the third party with the permission of the client to make sure that they are getting that the amount which has been reflected in both the books are similar. Is it? Are similar. Fine. This is where we are talking in terms of the client. If the client internal controls are weak, supplier statements may not be available. You have to make sure that every month you have a statement. See, you see the bank, okay, you have your bank account. In the bank account, what will happen? You have the savings account also. In the savings account, at the end of every month, is it? At the end of every month, second, third, fourth, what they will do, they will send you a bank statement. Maybe we are not individually, we don't want, sometimes we will not open it also. Okay, sometimes, but the bank will send, is that to make a confirmation that what is the bank balance and what is the balance with the thing. Similarly, if the client's internal controls are weak, they are not, you have to, every month you have to make a reconciliation. Every month you have to create a sub statement. Is that you should not carry forward. You should not burden yourself that we will do after 2 months, we will do after 3 months. No, we have to do a checklist. We have to do every month. Is that if they are weak, they will not be have a supplier's confirmation. If internal controls are weak, definitely nobody is overseeing this activity. People will not be very serious. This provides evidence. This provides evidence of completeness. Is that if we are getting the supplier statement, then it is going to be a completeness. If you are not getting a supplier statement, it is incomplete. Where internal controls are good, the confirmation focus on large balances. Is that you have large balances. Assume you have a large balances of 1 million, one of the client. That I'm not saying that we have to ignore small balances, but large balances should tally. Is it? Large balances should make sure that if large balances there is a difference, is that there is a difference. Assume you are showing 1,505,000 and the client is showing only 95,200. Is that definitely there will be a huge difference of almost 10,000. Then 10,000 is not a small amount. Is it? When internal controls are good, the confirmation focus on large balances. Where internal controls are weak, the confirmation focus on regular suppliers. Sometimes small balances, zero balances. Means we are not that much particular about the things what's happening in the suppliers transactions. So now, what is there are two things. You have a positive confirmation, you have a negative. What is the positive confirmation? You are talking about blank or zero balance confirmation. See, if some cases, in some cases, you have a zero balance of the client. If that is also there, you have to send. In your account, you have a zero balance. You have to get confirmation. If the client will respond, is it right? If the client will, if the supplier, don't get confused. If the supplier will respond, fine, it is agreed. If supplier is not respond, it is not agreed. Does not state balance, or the supplier has to fill the amount in and return it with a detailed statement of account. Is that you should not only state, you have to fill in, you have to see, that is what it says. They will say Real Omani, they will put a blank, okay, they will put a blank. The client has to write that the amount is 2,615. Is it? You have to write. When you are writing, it means the evidence is more weightage. Okay? Our amount must be reconciled with entity records. Are you understanding? Is it clear to you?
Yes, sir. It is clear.
Fine. They say trade payables and accruals are likely to be tested. Okay, in a question on audit evidence, they say it has been tested so many times. Okay, yeah, what is the procedures we have to need? They need to precise and test. Is that what they are asking for? Fine. Now, a little bit more. This they will ask. They will ask. They will not say that they will not ask. But really, the possibility is somewhat less. Fine. Now, when we do the things, they are talking. See, till now we are talking about current liabilities. Now we are talking about non-current liabilities. What are the non-current liabilities? You have debentures. Is that you have debentures? In other words, we are talking in terms of bonds. You have loan. You have taken the loan. Any loan which is repayable more than 1 year is going to be identified as a non-current liability. Is it? Now, when you are making the assertions in terms of non-current liability, there are three things are there. Completeness is there, classification is there, accuracy is there, and classification and understanding. Yeah? The completeness means you have to update. You have taken, see, very simple example. A client has taken a loan, long-term loan, okay? They have taken a long-term loan. When you have taken the long-term loan, you should always update, is it? You have to update whenever there is a repayments. Is it? Whenever there is a repayments, you have to update the long-term repayment account, okay? So that it will be complete. And you have to know in terms of accuracy, it should be classification. Again, I am saying the same thing, whether it is going to be a current liability or it is going to be a non-current liability. Is it? What are the things we have to know? Obtain, prepare a schedule of loans, okay, outstanding. How much is the loans at the end of the year, okay? What are the loans outstanding? And for each loan from where we have taken, name of the lender, date of loan, maturity, interest rates. Is that different rates of interest will be there? Interest date, interest rate. Sometimes you will pay in advance. Is it right? Sometimes you will pay in advance. Sometimes the client will pay in arrears. In the beginning of the month, at the end of the month, at the beginning of the year or end of the year, is it? And the balance at the end of the period and security. This is what we have to be very serious. That is the reason. When they say 10% 5-year loan, is it right? You will have 6% 7 years loan. Is that even they will say that when they have taken it, they will mention. Is that when they have taken it, they will mention that during this year they have taken. Is that during this year they have taken, at this rate of interest we have taken. This amount is there. Here they say that it is 20,000, it is 15,000. Is that apart from that? Another thing that is very important. They will also mention whether it is secured or whether it is unsecured. Is that they will mention whether it is secured or there. This is what all the things. At the moment you are thinking about the loan, is right? Compare opening balances. First and foremost is you have to compare the opening balances with the closing balances. Is that any clerical accuracy of analysis? Is that because any at maybe some some subordinates will do. Okay, we have to make sure that everything has been posted accordingly. Compare, when you are doing the things, compare the individual balances. Is it right? Compare the individual balances with the general ledger, because general ledger will be reflected in the trial balance. Is that general ledger will be reflected in the trial balance. When it is reflected in the trial balance, it will lead to financial statements. So always in all the chapters, they will say that you have to be very clear with the general ledger. Agree name of the lender, is that from whom you have borrowed, any debenture holders, any equivalent, any, what are the details, is that what are the details of the person who has given us loan, any additions or prepayments. Maybe you have any, when you have added loan to the loan, same loan if there is any loans which have been added to the existing loan, any top up is there, is that any top up is there, any prepayments are there, you have paid anything in advance, is that any settlements are there, you have to be very sure, is that confirm repayments in accordance with loan agreement. Are we paying, is that are we paying, is that on regular basis, is that are we paying on a regular basis or not. That's what a confirm repayment in accordance with loan agreement. Installments, are we paying installments correctly, is that any negotiations, any prepayment, any post payment, anything restructuring. Means what happens, you have taken a loan for 5 years, is that the client has taken a loan for 5 years. Now what will happen, the client will have some difficulty. They say that I am extending loan to 7 years. Is that definitely they are breaching the covenant, they are breaching the rules and regulations. If that is the case, any restriction we have to. Example, examine any cancelled checks. Is it memorandum of satisfaction for loans repaid? Any checks it has been cancelled, bounced, any checks has been bounced. Any time we have not met the deadlines, is that, and any, sometimes what will happen, we have not met the payment deadlines, okay, not met the payment deadlines. If anything we have not met, then we have to ask what is the reason, is it, verify the borrowing limits imposed by the agreement, not exceeded, is it, what is the limit. They say that you can borrow, bank will say that you can borrow 50,000 reals. Now what will happen, are we within the limits of 50,000 or we have exceeded? If it is exceeded, is it, if it is exceeded, then we have to know what are the reasons. Is that what are the reasons? Now if you ask me in simple terms, you will have the bank overdraft. Is that you have the bank, client will have the bank overdraft facility. If they have the bank overdraft facility, what will happen? They say that you can borrow 10,000. Sometimes what will happen, they need more, they borrow 15,000. They will charge rate of interest, that's a different thing. But why, what is the reason that on some particular occasion, situation, why we have borrowed more? Is it? That is why we are saying, we are talking about verify what are the borrowing limits. Examine signed board meetings related to any new borrowings. It has to be passed by the resolution, has to be passed by the board of directors. Any new borrowings. Is that what we are doing? We are getting a direct always keep it in mind, you should get a direct confirmation from the lenders. Is it? It is the external confirmation. Is it right? You have internal confirmation, you have external confirmation. You have to get the direct confirmation from the lenders, so that evidence will be having a more weightage. Is that in terms of what is the amount of outstanding? Is that what is the amount of interest? And what is the security, against which security it has been, the loan has been taken? Is that what is the guarantee? As simple as that. Is that as we are talking about the guarantees, our salary, guarantee the settlements. Is that for if the bank, if the client is taking the loans, definitely they have to give the guarantee. Verify interest charge for the period in accordance with the statement. Is this what we are doing? We are doing in the income statement. You are in the income statement, you will see what is the finance cost. Is that in the whether we have charged it correctly or not. If you have done financial reporting, then you will understand, you will have a clear view. Is it right? They will give what is the interest paid and what is the interest outstanding. Confirm assets charge has been entered in the register of charges and notified to the registrar. Is that if there are going to be any assets that has been charged, is that then you have to mention, you have to notify if there are any charges. See what happened, sometimes they will take the loan against the land, sometimes they will take the loan against the buildings. Is that sometimes they will take the loan against property, plant and equipment. Then we have to make sure, is it right? Then we have to make sure that those have to be communicated effectively. Review any restricted conditions, provisions. Is it right? Any restrictions are there, any conditions are there. Is it right? See what will happen. Simple, take example of a car. If you are purchasing a car for cash, is it, the registration will be your name. If you are purchasing a car on a loan, what will happen? The registration will be under two names. The registration will be under the name of the bank and the registration will be under the name of the owner. Once you have paid all the loan, then bank will give NOC. Once you are getting the NOC, then in the next time you can convert your asset under your own name. Is that this is what? Any provisions relating to default. Review any correspondence relating to the loan. Review confirmation replies for non-compliance. Here we are not paid any loan. So client will not pay any, sometimes they will not pay any installments. You have to make sure that auditor has to make sure that the client has paid the loans according to the terms and conditions. That is a simple understanding of this concept. Is it? That's what it says. And review minutes, cash book to confirm that all loans have been recorded. And review draft finance accounts. Okay, draft to ensure that there is a disclosure for non-current liabilities in accordance with accounting standards. In accordance with accounting standards, you have IFRS 9. IFRS 7 disclosures. Is that this is with respect to what? This is with respect to financial instruments. IS 2, sorry, IS 32. Is it? We have to make any, see, I told you in the beginning, any elements repayable within 1 year should be classified as current liabilities. Within 1 year from the reporting date. Is it? This is with respect to what? This is with respect to non-current liabilities. Okay. One by one they are mentioning. They are talking about provisions and contingency. Provisions and contingencies is IAS 37. The provisions is nothing but it is an estimates. Is that estimates for losses? Okay, estimates for losses. We are making the provision with respect to the concept of prudence. We estimate losses Okay, how much you have, just say maybe actuals will be less or actuals will be more. Provisions and contingency involve the judgment of management, and which makes them difficult to audit. You are making your own judgment. Is that your judgment will have your own assumptions. Is that the management will judgment will have their own assumptions. Is it with the own assumption? Definitely, it will be difficult. In which areas we are doing judgments? See, they say that what do you mean by contingencies? Any idea? Any idea about what you mean by contingencies? Any idea about this?
No, sir, I don't know.
Contingencies is may be or may not be. Okay, contingent assets and contingent liabilities. Maybe or maybe. See what will happen. What are the contingency liabilities? Is it against the client? Okay, there will be some legal charges. Legal cases will be there. Maybe they will win or they will lose. Is it maybe? The moment you say maybe, if they lose, they have to pay. If they win, they will receive. Is that if they lose, they will pay. There is a contingency, may or may not be. Is it? For that, we have to make the assessments. What are the contingencies? Sometimes you will give guarantees. Is that I will not say guarantee. Nowadays, guarantee has been replaced by warranty. What is the warranty when you are saying you are buying a car? They say warranty for 7 years. Warranty means maybe or may not be. Is it right? If there is any problems, it may. Since there is no rule, hard and fast rule that we will have any problems will be there. If any problem, then terms and conditions will follow and they will have a warranty. It is a provision. Okay, it is a provision. Contingent liability. Is that contingent liability? Discounted bills of exchange. Is it we are discounting the bills of exchange? There is a contingency. Is it? Sometimes it will honored, sometimes it will not be honored. Okay, that's it. Any uncalled liability on shares or loan inventory. Is there any? See what happens. You will say that there is a loan of 1,000. You are making a point that there will be a loan of unauthorized of loan of 1,000. Now what happens in 1,000? We may, yes, similar to take an example of a credit card. Credit card is smaller example, you can put it a bigger example. When you have the credit card of 1,000 reals, okay, you may not use 1,000 reals, okay, but you have that provision with you. You can use it. Is it right? Sometimes you will use more, sometimes you will use less. If that is the case, you have to make an estimations. Is it? You have to make estimations on the shares or any estimations on the loan inventory. Lawsuits, I just told you now, any legal cases. Is there any legal cases? Is there? You should make sure that you have to make a provision for that. Maybe the client will win, maybe the client will lose. option to purchase assets. Is that options to purchase? We are not saying we are giving, they will have the choice. Is it right? You have the choice. You may purchase, you may not purchase. Is it? Is it option? Here we are talking about option to purchase in terms of investments. Is that the option to purchase which type of assets? Assets are is nothing but very clearly in terms of equity investments. Means if we are going to come across these things, we have to be very specific about this is what, see, this is the almost we are ending the audit syllabus. When we are doing ending the things, every other area will be focused. Okay, comparatively to the other one, this will be less specific. I'm not saying less important. Okay, where any litigations are there, any legal cases, any claims are there, understand point? Automatically you have to take the expert opinion. You see, audit procedure to this is one area they will judge, they will assess. Okay, if there is any legal cases are there against the company, appropriate inquiries with the management and others, including legal advisors. Every company will have a legal department. Is that every company will have, if any inquiries are there, you have to check with the management or legal. Review minutes of those charged with governance, any correspondence between the company entity and external legal advisors. Definitely any correspondence, communication is there. From the communication we will get some evidence, we will get some understanding what's happening, what's not happening. Review any, you have legal expenses accounts. If there is any legal activity, is it right? Any legal activity, what will happen? In the administrative expenses, the legal expenses will increase. Automatically you can come to a judgment. While there may be some issue happened because of the legal expenses, then you will go back, what are those legal issues? Is that you will only understand the things. Okay, you are not when I say you have to go back, means no, we have to understand why it has been increased, what are the reasons. More than that, nothing. Use information obtained regarding the business, including the discussions and any in-house legal department. Any information you are obtaining, is there any information you are obtaining regarding that any legal issues, is that obtained from the discussions or in-house legal department, you can use that information for your auditing purpose. Is it? Now, audit purpose, when litigations has been identified, okay, we have identified the litigations, we have said there are some legal issues are there, is there some legal cases are there. Immediately what you have to do, get the direct confirmation with the lawyers. Is that if we have identified any issues, we have to get direct confirmation from the lawyers. You have a letter of inquiry, a general inquiry or specific inquiry. You can ask for a letter of inquiry, in general or specific, prepared by the management and sent by auditor. Is that you have any letter of inquiry, general, prepared by the management and sent by lawyer to communicate directly with the auditor. This we have done. Any third party, is it right? Any third party, okay, any third party. Communication should be with respect to director clearly, directly, okay. This is the communication with the director. Any letter you are mentioning, any letter you are sending, okay, any letter you are sending to the third party, then that letter should have a prior permission. Is it prior permission of the client? In the end, what we have to do, we have to take the return recommendation, okay, in writing from the management regarding any litigation. It's not a small issue, it's a big issue. If there are any legal cases, you have to take them in writing. In certain circumstances, if there is a possibility, the auditors can meet the lawyers also. Is that the auditors can meet the lawyers? What they are saying, how it will work for each provision, whether the company has a present obligation. For each provision, for each material provision, is a value provision. It means there should be something happened in the past, okay? Something happened in the past, and for that past, what you are doing, you are making provision for the future. Means there should be some event. Whether the event is probable, is it? That means there is a probability that there will be an outflow of resources. There is a probability, means there is a probability of payment in future. I am writing very clearly, probability may or may not be. Outflow of resources to settle the obligation. Whether the provisions, when we are making the provisions, you are making the best provisions. Means we are making the provisions accurately. Is it? We are making the provisions more efficiently. Is it? With more accuracy, with preciseness. Okay? Means you should not have any over provisions, okay, over provisions, or we should not have any under provisions. Fine. These are the provisions for contingencies. Fine. What they are saying, how we are testing the things, okay, how we are now you can understand how important is IS 37, provision for contingent assets, provisions, contingent liabilities, contingent assets. Very simple. That's the same thing. If we have to test the provisions, obtain details of all provisions, what they have made, and they have included in the accounts, and any contingencies, that any contingencies may or may not be, okay, contingent liabilities, contingent assets has been disclosed properly, is that in the notes to the accounts. We have to get the detailed analysis of all provisions. Provisions is not only for one, is it right? Provisions will be for taxation, is it right? Provisions will be for receivables, is it right? Provision will be for taxation, provision will be for receivables, provisions will be for any damages, is that? Provision is for any damage of goods, is it right? Damage of goods. Provision is for everything, is that? As a provision for insurance, means you should analyze all provisions. What are the opening balances, what are the plus, okay, what are the closing balance. Determine each material provision, whether the company has present obligation. We should not simply make the provision, is it? The people are there. See what happens when you are making a provision, is it right? When you are making a provisions, your profits will decrease. When you are making the provisions, your expenses, estimated expenses, will increase. Is that? To just people are there to just fluctuate the profits plus or minus. You are making a provision, and in one of the slides we have referred. This is the judgment of the management. It is very difficult to work it out. Okay, very difficult. The management will say these are the provisions which has been there. Then you cannot question them. Is it right? They will give justification. We have to take that into consideration. Determine each material provision, whether it is probability, it may happen, the chances of happening that the transfer of economic benefits will be required to be settled. That the chances, that means, see, when you are making the provision, there is the probability that we are going to pay. Then only, if there is a probability, whenever you have to reflect it. Otherwise, just for the sake of provisions, we cannot do that. Automatically, what will happen? If you are making provisions left, right, and center, it will affect your profits. Is it? It will affect your profit. Automatically, what will happen? When you are making the profits, the profits will what happen? The profits will, expenses will increase and profits will decrease. Fine. Checking whether any payments have been made. Is there any payments in the made after the year, post year end? Is that any payments we have made after the year ending date? Review of correspondence with the solicitors, legal team. You have to review any banks, because we are going to pay by bank, with respect to customers, with respect to insurance companies, is that with respect to suppliers, both pre-year and post-year. Means these are the things legal team will provide. Any legal activities happen. Is there any legal activities, cash flow, bank will be there. Any legal activity with the customers, you will have the correspondence. Insurance companies will be there, isn't it? Likewise, you will have multiple evidences where you are cross-verifying each and everything. Sending a letter to the solicitor. Solicitor is nothing but the legal team, to obtain his views. Any explanation we require, we can ask for it. Discuss the position of similar past provisions with the directors, considering the likelihood of reimbursement. Sometimes what will happen, some companies will have, most of the time, legal disputes. Then we have to know how it is going to be, what they have made last year, what they are going to, how much they have made the provision, is it right? How much they have reimbursed, is it right? How much you have reimbursed. Fine, it will give a idea. Assume in 2022 you have made a provision of 1000, but you only reimbursed how much? 500. In 2023 the client has made a provision of 5000 and there is no reimbursement. Then automatically what will happen? You should not decrease the profits. The most important point, if we are making the provisions, expenses will increase, profits will decrease. And when you are making the provision, the management has its own discretion. They will give reasons. That reasons, when we are accepting those reasons or not, that's a different case. But they will give the reason that because of that we have made the profit. We are not talking about the things when things are right. In some cases, they will say that we are making provisions, but there is no reimbursement. There is a scope for fraud, mostly fraud, less for error. Okay? What they are saying, the same process is that now you can understand, nothing is different. You are recalculating all the provisions, comparing the amount from the post year, is it right? And payments with any amount paid in the past. Is it? Post year means we are comparing with next year, this is the post year. We are comparing with the pre-year, with the past. Any fluctuations, it can be identified very easily. In the event it is not possible to estimate the amount of provision, you have to check that the contingent liability is disclosed. If you are not making a provision, then you have to make sure that there is contingent liability is exist in the notes to the accounts. What is the explanation they have given? Is that what is the explanation they have given? Considering the nature of client business, would you expect to see any provisions, example warranties? If you take into consideration what is their automobile business, you are taking a smartphone, okay? You are talking in terms of a smartphone. You are taking an electronic gadget. Is that you are buying any electronic gadget? When you are buying electronic gadget, they will say that it is 1 year warranty. People will say that they want extended warranty. They will pay. Okay, so you have to see what is the what you expect to see other provisions or warranties. Consider the adequacy of disclosures of provisions, contingent assets and as per we have done as per IS 37 or what they say. F8 students are confused between contingent liability provision, so they say that you have to F7 is nothing but financial reporting. In financial reporting, they have one exclusively chapter on the IS 37. This part of the syllabus is likely come with a small, see the things, mini scenario. It is not a big question. They will talk about a small scenario. Is it right? The way is to prepare first, make sure you're comfortable with the slide and practice fine. Okay. The specimen examination is shown in a mini case. We'll complete this and we will stop. Okay. Anybody join? Assalamu alaikum, Mariam.
Salam, sir. How are you?
Fine. Fine. Now, what they say, we have done with respect to IS 37. Okay, just revise it. Okay, IS 37 provisions for contingent provisions, contingent liabilities, and contingent assets. Is that this is the examination, and you will find similar questions somewhere. Okay, they have Botoli Beach Hotel operates hotel providing accommodation and leisure facilities. It was year-end and you are a audit senior. And currently what you are doing, your audit program for you are doing a year-end audit. You review the notes of last week meeting between manager and the fire director. Two material issues were discussed. Two material issues were discussed. Both the directors received correspondence in September from the customers who attended wedding at the hotel. They allege that they have suffered food poisoning, food eaten at the hotel, and claim substantial damages. Botley lawyers have received a claim and believe that the lawsuit against the company is unlikely, probable. Probability is less. Okay, probability is less. Now, if the probability is less, whether we should make the provision or not. Again, we are from the financial perspective we will see, but in this case we have to take the legal opinion also. Is that we have to take the legal. What they are asking the procedures. Okay, they are asking. Now, very simple. If we are talking in terms of it, they have made any provisions or not. They have communicated to the clients or not. That's sometimes what will happen. They will communicate within how much period they have received the notice. Is that you should not say that it happens last month and now after 1 month you are claiming against that food poisoning has happened. Is it? You should make sure that what is the sufficient and appropriate evidence in relation to the above issue. Now, when you are talking about the sufficient and only 4 points, this is where I am very much concerned. If they gave you for 4 marks, make it sure you have to write only 4 points. Now you will ask me, I told you before also, you will ask if out of these 4, we will, unfortunately, 1 will be wrong and 3 will be right. Fine, nothing will happen. Is it? Otherwise, what will happen if you go on adding 2 more points? Is that for other questions, your time will be taken over by this question. Other question will have 10 marks. Other question you know well. Other question you know well. Because of this 1 mark, you are losing. May lose a part of this 10 marks. That is the reason they always caution us that if there is 4 points, write 4 only. Review correspondence regarding the claim of damages, whether the view the claim being unsuccessful is reasonable. What they are saying, go back to the question. They are saying that it is unlikely. Is it? It is unlikely. Then you have to say what are the reasons for unlikely? Is it right? What are the reasons that may have happen unlikely? See, when you are serving the food, when the client serves the food, they will take all the precautions. In some cases, they will test the food also. And they will have the log sheet also. Yeah, they will have the log sheet also. Who prepared, when they have served, what is the packing date, what is the expiry date, what is the batch number they are having. Is it? When you are selling the product. Means whether first you have to know whether what is the correspondence to claim damages, when on what is the view that it will be unsuccessful. Post year end period to confirm whether any claims, any payments regarding the claim has been made. You have to review, is it right? You have to review post year end. Means after the year end you have to review that is there any payments we have done, part payments. Is there any part payments have been done to the client? If it is there, then claim is justifiable. Is that claim is justified? Contact Botelli's lawyers with the client permission. Always you have to contact the third party with client permission. Keep it in mind. To obtain their view as to success of the, you check with the lawyers whether it will be successful or it will not be successful, whether it is genuine or it is not genuine. Any board meetings for evidence that the director expectations of the claim, what discussion has been taken place. Is it what discussion has been taken place in the board of directors meeting? Is it board of, that gives you indication. If it is a serious matter, they will take up very seriously. If fine, it's not that much serious, they will push down the line in the discussion. Obtain representation from the directors that the claim is unlikely. When they are saying unlikely, fine, we have to discuss with the lawyers, we have to get in writing that why the claim will not be successful. Review the financial statements to have an adequate disclosure. Is it to have the adequate disclosure with what? With contingent liability. Always keep it in mind whenever it is a disclosure, financial statements, and especially notes to the accounts. Especially as an auditor, as an accountant, notes to the accounts is almost 55% of the source of evidence. You will get a complete picture what's happening, what's not. Because when you are talking about notes to the account, in the notes to the account they will give what? They will give a brief. They will give a brief summary. Is it fine? This is what we are talking in terms of the damages claims, in terms of how the things will work with respect to things. Yeah? If there is if we come across any questions in the next class, whenever you are doing, then it will give you a much better picture. The main areas of concern with share capital. Yes, tell me.
What is loan inventory under
Pardon?
contingent liabilities? Loan inventory under contingent liabilities.
What inventory?
Loan inventory under contingent liabilities.
This one now?
Yeah.
Uncalled liabilities, is it? Uncalled liabilities, or we can put it as loan inventory. Okay. It is a contingency, okay? Loan inventory, 1 minute. I will put like this, okay? We have see loan inventories. If you have you want to purchase any inventory in future, yeah, you are planning to purchase inventory in future. Is it for that? If you are taking, if you are having any agreement, if you are having any agreement with bank, that we will buy this inventory, and for that inventory we need funding. We are planning that some inventory will be bought in future. For that, in the future, if you are buying an inventory, are we having any funding guarantee given by the bank? Is it funding guarantee given by the bank? We are saying that in future. The moment you say that in future, definitely it will be comes under contingency. It comes under contingency. Is it? And definitely, is it now what happens? Assume now come to the numbers, okay? You are planning to buy an inventory of 100,000. Okay, you are planning to buy, you are planning, it's only a planning. Is that it is only an estimation. Is that it's only an estimation. You may or you may not buy. You may or you may not buy. But what will happen? For this, the bank will give guarantee of 100,000. You may use this guarantee or you may not use this guarantee. Contingency. Is it? Contingency. You may use or you may not use. That is the reason. What I told you, I gave the example of a credit card. You will have a credit card for 1000 reals. Is that what you are doing? You may use for purchases, you may not use for purchases. You may use for purchases or you may not use for purchases. If that is the case, have the client has any understanding with the bank regarding any loan inventory. Is that any contingency, any understanding? Words are very, very specific. Any understanding with the bank that they have any loan inventory means they can, if in future if they are going to purchase inventory, future means next 12 months. Okay, fine. Next 12 months. If we are going to have any future requirements, then is there any financial support available from the any lender? Is there any, from any lender you have any financial support? That we have to take into consideration. Is it clear?
Yeah.
Fine. Is it okay?
Yeah.
The main areas of concern with share capital is and reserves is the compliance with the law. Is it little bit when you are talking about the share capital? Is it that what will happen? You will have different levels. You will have authorized share capital. You have subscribed issued share capital. You have subscribed share capital. You have paid up share capital. Is it right? The what is the main areas of concern is whether we are following as per the rule of law. Audit work will focus on share equity capital, the issues of shares, the transfers of shares, dividends and reserves. Is it? What we are doing, we will little bit work with respect to equity, share capital and related issues. How many shares has been issued, how many shares has been subscribed, how many shares has been paid up. We will take all the classification. Apart from that, any transfers are there, any sale is there. Is it? See, if it has to be very mandatory. In most of the companies, you have to mention the people who are holding more than 5% or 10% of the shares. Is it? Whoever hold more than 5% or 10% of the shares, they have to be given in the listed form in the annual reports. Is it okay?
Yeah.
Directors remuneration, it is just it's is that how we are going to pay to the directors? Is that what is the how the emoluments or how, because why we are talking about directors remuneration, it matters, it is material. Okay, it is on the material side. Is that what, when we say about directors, what are the salaries, fees, bonus, any pension contributions you are paying as per the contract? Okay, any non-cash benefits, accommodations, any conveyance, any other facilities they are being provided, and compensation for loss of office. This is one thing. Is it? Means if the director is retired, if director is sacked, is it right? If director is sacked, there is something is there. Whenever the employees will be sacked, they will have they will have some settlements. Is it right? I'm not getting right now in my mind. We not will not say terminal benefits also. There's some word is there. Is that that if they are losing the office by in case of retirement or in case of death, what are the how much we have to be paid? They say that directors' emoluments are material by nature. Is that they are material by nature? What are direct? Why are it is direct emoluments are important? It is nothing but it is related to, see, little bit. The little bit accounting is there. Okay, little bit IAS 24 related party disclosures is not in this syllabus, but it is useful to use the requirements. They say it is not used in the syllabus, but it is part of the requirement. IS 24 requires that compensation payments to management should be disclosed because it is material. Because it is material, it has to be disclosed. Compensation payments. Key management will include who are the people we are talking in terms of board of directors. What are the compensation? Compensation in terms of wages, annual leave, is it right? Encashment of annual leave, any profit sharing, any bonus, plus any post-employment benefits. If you are working as a director, what will happen? After retirement also you will get some, not full benefits, but some partial benefits and some long-term benefits in terms such as pensions. Is that such as pensions and any termination benefit? The auditor must ensure that requirements as per IAS and most importantly with respect to local legislation. Is that with respect to local legislation? Fine. For each director, obtain a schedule of emoluments. Okay, split between how much we should not use the word wages. Okay, but if they are using, we cannot have the right to substitute it also. How much bonus they are getting, what are the benefits? We have to get the schedule of these things. We have to do a recast, make a addition, totally with respect to the schedule, and the totals are in agreement with the disclosure. Ask each individual director to confirm emoluments listed are complete. Ask them whether they have got each and everything as per the terms and conditions. Compare what we are doing. Compare the emoluments with previous year and with expectations. Is that compare with the current year and the previous year? If you have by this time, what we are doing always, wherever there is a materiality, is it right? Wherever there is a materiality, we conduct analytical procedure. When we conduct analytical procedure, we will conduct the current year, is right? Will compare with the current year with the previous year. To know the fluctuations, is that extreme, any huge fluctuations is there, automatically it will be reflected. Is that the audit plan to test director? I am little bit fast. Okay, agree salaries, fees, pension to payroll records. Is that agree with the individual directors whether it has been paid into bank. Is it? And agree with the bank statements. Review the contracts of the director that all emoluments has been consistent with terms of this contract. Review board meetings and minutes. Any remuneration for evidence. If they are paying any bonuses, extra bonus, something additional amount, it has the approval of board of directors. Review the cash book for any unusual transactions. Is that any with respect to directors' emolument, they have paid something not on a regular basis, something they are paid in between the year. Obtain the review of returns to tax authorities. It is a legal document, is it right? It will a legal document because they have to pay fees, okay? They have to pay taxes, is it right? Some taxable benefits, some non-taxable benefits. Is that there will be some taxable benefits, there will be some non-taxable benefits. Whether they have paid any taxable benefits, they have paid tax on those benefits or not. Is that consider the adequacy of disclosures with respect to in accordance with the accounting standards. Is it accounting standards? And most importantly, when you are talking about the directors, local laws and rules, national rules and regulations. In some cases, is it right? In some cases, you will come across some rules and regulations. That we have to make sure that it has been worked out. See the thing. What happens? You are talking about a. Just we'll complete this. Okay. We 1, 2, 3 only. Okay. Just we'll complete this. Is it? They are saying that you are responsible for auditing director's remuneration, provided with the information. They have director A, director B, director C. See what audit test you will perform. Is it? See, they are in some cases they are having the bonuses. See the thing. Here the bonus is very, very high. Is it? Director A. And there are termination payments are there for director C. There is a incentive payments are there for director D. Is it? Director A is comparatively higher, materiality is high, is it right? Compared to other directors. What they say? When you are talking about the director payments, okay, there are two things, is it right? First, we are covering the salary aspect. The second one, we are covering the bonus aspect. Is it? Yeah, we are covering the salary. What we are doing? What salary amounts, monthly records, and bank statement. Always keep it in mind. Payroll records has to match with bank statements. Whatever reflected in the payroll records, the same amount has to be net. Is that net? To ensure that the amounts are accurate. For directors C and D, obtain leaving and start dates. What happens to director C? See the thing. They have termination benefit. He left. Is it right? Director has left. What is the incentive payments? Any idea about incentive payments?
Related to the performance during the year.
And is it incentive payments are fine related to the performance. But from this perspective, what is incentive payment? See, you are working with X company. Okay, you are working in the X company. You are a director in X company. Now you are moving from X company to Y company as a director. As a director, you are moving from X. Is it? The Y company will pay you some amount initially. Is that the Y company will pay you an amount initially. Why initially? See, if you understand the football players, okay, you just understand the football players. A football player, they are playing for a league, okay, they are playing for a league. If a football player is moving from one club to another club, is it right? Another club, there will be a transfer fees will be there. Is that there will be a transfer fees will be there. Means one club is buying a player of another club. Definitely, as a director, you will see how much you will get benefit if you are coming from one company to another company. whatever the new company will pay to the newly appointed director, apart from all the related benefits, it is called as a incentive payments. These incentive payments will be given for those directors who are joining. Termination benefits will be given to those directors who are leaving the organization. Fine. That is what it says. It says that for director DC and obtain leaving and start dates, HR towards watch this on the board minutes meeting. Recalculate when they say leaving and start dates. The director D is joining, director C is leaving. Recalculate the salaries on a pro rata basis. Is that what will happen? They will say that yes, I am joining on 15th. Either you are joining on 15th. Pro rata basis. You are eligible for 15 days only. Based on terms and conditions, okay? And in some organizations, directors, we are not talking about a senior level also. So what they'll say, they say that okay, you are joining as a director, whenever you are joining, if you are joining before 15th or after 15th, will be paid full. Okay, that is a different case. We are not talking about those things. But pro rata means based on the number of days. Fine. Watch the level of bonuses to the board meetings, pay records as per the board minute meetings. Is it? And as per the see, we are doing what? We are doing three things. We are taking the source of minutes, we are talking in terms of payroll records, and we are talking in terms of a bank statements. We are taking from the source to the end, that whatever has been decided, that much has been paid. Discuss the management the reasons why C is awarded a bonus despite leaving the company during the year. Is that they have what they say? See, all directors has been awarded bonus. C is also awarded bonus. C has left, but what are the reasons? Is that what are the reasons for the awarding of the bonus for the director C? Next. In terms of termination benefits, review the employment contracts for directors C and D to verify there is a clause of outlining this in terms of termination benefits and incentive payment. Is there any clause is there? Is there any, as per the rules, is there any rules is there that you have to pay incentive, you have to pay termination? What the level of these payments? Again, what is happening? You have to go to the, because directors decisions are taken at the board, especially exclusively payroll records and bank statements. Now what's the level of these payments with respect to the board meeting, payroll records? See, previously we are talking about bonus, here we are talking about termination benefits. Okay, and the last one, recast, retotal the schedule to ensure that note is accurate. Review the disclosures in the notes to account that it is as per the international, as per the law and accounting standards. Is it okay?
Yeah.
Fine.